Okay, now we'll come to one very easy standard called operating segments. This standard is all about disclosures, no accounting involved, no debit credit is involved. Companies operate in different business activities, okay, and different activities have different risk and return. Different amount of resources are invested in different activities. So earlier, what these companies did long back, they will only give, suppose, one profit and loss statement, one statement of financial position, which will cover the profit of different business activities. So as an investor, it was difficult for us to understand which division or which department or which segment is performing in which manner. Is it right? Say, for example, a company has 3 divisions and their profit is like this: 100 crore, 300 crore, loss of 25 crore. So which figure you will get to see in the profit and loss? If only P&L account is presented, 375. As an outsider, you will never know there is a loss making unit also here, and the company will continue to do business and burn your money, okay, year after year. So now it is felt that it is better that we should give more information to the investors, that this company has invested so much capital in this activity, how much profit these activities are generating. They can compare it with other entities. They can calculate the rate of return of each segment, and they can understand the risk better, return better, and can take a more informed decision. So that is the objective of having a standard on operating segment. So basically it is like dividing your statement of financial position segment wise and dividing your statement of profit and loss segment wise, so that one can see how much profit or loss, asset, liabilities are committed to different segments. So that is the idea behind this standard IFRS 8. This standard gives lot of disclosure requirements relating to operating segments, and also gives information about the products and services where they operate, geographical areas in which it operates, and it gives information about the major customers also. Now, why do you need to give disclosure about major customer? Because one is that you know from which customer you get maximum revenue. But at the same time, if you are concentrating too much on a particular customer, the risk is very high. As a business, the risk is high if you are dependent on few customers or certain customers only who purchase, say, 30% of your output. So once that customer stops dealing with you, you would lose 30% of your business, 40% of your business. So therefore, this standard gives major customer wise information also. Okay. The standard requires the whole entity's financial information to be segmented and reported on the basis of principle laid down for identification of operating segment. So it's basically disaggregation, opposite of aggregation, disaggregation of information that is contained in statement of financial position and profit and loss. So that gives more idea to the investor, and that is very important for decision making. Companies don't like this standard. Entities don't like this standard because they will have to give more information product wise, and then nowadays shareholders are also very active, very dynamic, and very intelligent. they will immediately ask the company that in case if this segment is generating losses, then why you are continuing with that segment for last so many years? Why don't you discontinue? Okay, they can also calculate the rate of return a segment is generating now. And then again the same question they ask the management, that we are investing in your company and you are investing in some business which is giving only 5% return. Better you invest in a government bond. So this standard has put a lot of pressure on the management, because they have to ensure that every segment generates enough profit, give a high rate of return. Second reason why management does not like it, you are sharing your business secrecy with outsiders. You are sharing your business secrecy with outsiders, that how much margin you are making in different product lines. More than your competitor is interested in your financial statement now. Each competitor wants to see what is their segment report, what margin they are having, why we don't have so much margin. It may invite more competition also. Is it right? So these are some reasons why companies don't like, but because you are a listed company, generally they follow listed companies or their subsidiaries associate. Because you have raised money from public, it is your duty to give disclosures to your investors. Okay. Now we will first go through few important definitions. First is the definition of the operating segment itself. What is an operating segment? What is an operating segment? If the given component meets the definition of operating segment, then come to the standard. Otherwise, bye. Don't apply the standard. So what is an operating segment? It is a component of an entity. Component means it's a part of an entity. It's a part of an entity. Now what that component can be? That component can be a product or products or geographical location, say China, or geographical locations, say Asia. Okay. Or it can be a subsidiary, or it can be a branch, it can be a factory, etc. But normally for this chapter we will find most of the companies use products and geographical location as operating segment. So first is, it should be a component of an enterprise that engages in business activity. So I will recommend you underline engages in business activity. How this term engages in business activity is important. Engagement in an activity means you have done planning. You have consciously put your resources, time and effort in that activity, and you want to achieve a certain result. That is called engagement in business activity. One-off transaction means, suppose I sell this AC one day, example. That does not mean I'm engaged in business of buying and selling ACs. Then the standard is not applicable. In Yes Foundation balance sheet, sale of air conditioner is appearing as a segment. My activity is not sale of air conditioner. Or for example, which question comes in exam also, that the head office does the investment of surplus money. But many companies don't have a specific department for investment. Once in a while, if there is a surplus, they invested. Will that investment activity become an operating segment? The answer is no, if they are not engaged in that activity regularly. That means you don't have a proper department, a team of people, a plan. Okay. But because you have surplus money, You invested it and therefore it generates income. You have investment in assets. So you have asset, you have income, you may have some expenses. Will that be classified as operating segment? One has to see whether the company consciously involves in that activity from which it earns revenue and incur expenses. The next thing is that this activity should result into revenue and incur expenses, including, to clarify, revenue and expenses relating to transaction with other component of the same entity. That is called inter-segment transfer, like interdepartmental transfer. In this chapter, it is called inter-segment transfer. One segment may transfer to other segment and it can even charge a price for that. Even that is covered by this standard. Whose operating results are, underline operating results. In this problem, we will go up to which stage for disclosure purpose? Earning before interest and tax. That is called operating result. Whose operating results are, means EBIT, PBIT, EBIT, whatever you want to say, are regularly reviewed by the entity's chief operating decision maker. In any business, there are some people who have the responsibility of reviewing the performance of the different segments, different businesses. So who is that person here? The standard gives him a name called CODM, Chief Operating Decision Maker. He can be just one individual, MD, CEO, COO, or he can be a MD plus whole-time director also, group of person, or it can be a group of directors, or it can be board of director also, the entire board. Is it right? Whose task is to regularly review the performance of that operating segment and to take decisions about the resources to be allocated to the segment and assess its performance. So what CODM has to do? One, review the performance, then assess the performance and take decisions relating to allocation of resources. That means how much capital we need to invest, how much manpower we need to invest, etc. and for which discrete financial information is available. The definition is very lengthy. Now last line we will discuss. Discrete financial information means you should be able to calculate asset, liability, income, expense and cash flow. Otherwise you can't apply this standard, because in next few minutes you will see the standard says you will have to disclose the profit of the segment. How will you calculate profit if you can't calculate income, expense? You have to disclose the segment asset. That means your accounting system, whatever accounting system you have designed, right now only when you form a company, buy such a software that it should be able to give you segment wise asset, liability, income, expense, cash flow information. So that in future when you have to apply this standard, your task will become easier. So that is why companies nowadays use advanced software, and while entering the data for the first time, they will allocate it cost center wise, revenue center wise, some methodology they decide so that this transaction gets accounted under that particular center. They can give any name to that. Okay. Even in your Tally software also that facility is available nowadays. Is it there? You can calculate cost center wise profit, correct? Because this is the need of the hour. Otherwise, how will you apply the standard? You have to sit down manually and each and every invoice, then you have to bifurcate over different segments. So at the beginning only when you do the accounting, plan for this standard, because at the end of there you will require data. Operating segment can be, okay, in-house trade segment, internal and external sale. That means some segment only deliver goods to other segments. They don't deal with outside entity. Some may do both the activities. They may sell to outsider also and they may sell to other segment also. Some segment only sell to outside customer. They don't transfer to internal other segments. And the standard says even the startup activities, which have not yet generated revenue, even they are sometimes treated as operating segment because the management wants to highlight them. They want to show it separately so that in future if they have to sell it, demerge it, do some negotiation, it will be useful. Okay, it gets the attention of different stakeholders. Now, who is the CODM? CODM is the authority to whom the segment manager furnish their report. The standard has been designed for large companies actually. That means there will be a CEO, there is a board, there is a CEO, there are segment managers who report to the CODM. They prepare MIS at the end of the month and they tell their bosses, see, this is what we have achieved during this month. And the top team, the boss, CODM, usually wants the information in a certain manner so that he can take decisions relating to allocation of resources or any such strategic decision. So such people to whom segment managers furnish the report, they are known as CODM. The standard does not make it compulsory that who will be the CODM. Let the entity decide. Okay, which is usually the board of directors or group of directors or the MD, CEO, etc. What are the responsibility of CODM? Reviewing the operating results of the segment. So he looks at the MIS report. Okay, every month most companies prepare MIS and then he reviews it, checks what is going right, what is going wrong. Then he has the authority for allocation of resources. The segment manager would want money, funds, and then he decides to allocate, and then assessing performance of one or more segments. And based on that, he takes decisions about future. He may take decisions whether to continue or not, whether to expand a particular segment, give more attention to a particular segment, curtail the activities of particular segment based on his assessment. So that is about CODM. Now, should operating segment be based on geographical location or based on product and service? That is a very tricky question. So the standard says look at the CODM first. How he reviews the organization. Okay. How does a CODM takes the decision? Is his focus based on geographical location or is his focus based on product and service? Okay. If the decisions are made on the basis of geographical reporting basis, then the geographical area would be termed as operating segment. For some business, location is very important. Like for example, if you're a software company, then for them, their customer base in different countries may be important. So in their case, the geographical area would be the operating segment. But in some cases, or in most cases, I will say, the decisions are made on the basis of product and services. Companies focus on the basis of product and services. That should I promote this product more? Should I withdraw this product from the market? Then in that case, that area of activity would be termed as operating segment. But sometimes the decisions may be based on both. Okay. Then you have to really ask the CODM, what is your basis of decision. Okay, how do you decide about the allocation of resources? And then that segment will be operating segment for reporting purpose. Practically speaking, most of the companies disclose product and service based segment. Is it right? Why? Have you found some company which is disclosing as geographical segment? Geographical segment information they give, but as a secondary information. The primary report is based on product and service. Okay. Now the question is, can two or more segments be aggregated into a single segment? A company may be selling toothpaste, soaps, detergents, cold drinks, beauty creams, shampoo, ice cream, paper, biscuit, milk, and so many more. Okay. We don't want to name anybody, but you have got the idea. So, how many segment it will disclose now? Some company may have 110 products. Do I need to write product 1, 2, 3, 4 till 110? The answer is no. In fact, in one paragraph you will read the standard says do not take more than 10 segments for reporting purpose. Do not take more than 10 segments for reporting purpose. Okay. So what we need to do here, we need to club, aggregate two or more segments if their economic features are same, risk and reward are similar. Okay. So this can be one question now. On what grounds two or more segments can be aggregated into a single segment? Like in this example which I have written, can we not club this soap and detergent into one segment? Because economic features are same. Can I not club this milk and biscuit and ice cream and cold drink into one segment? Maybe yes. So like this. So we have to identify which segments can be aggregated into one. First of all, they should have similar economic characteristic. They should have similar economic characteristic. So that is basically risk and reward should not be too different from each other. If you are selling cigarette and selling biscuit, can they be put as one segment? Primarily no, because their economic characteristics are different. And then they should be similar in the following parameters. What are the common parameters they should share? Nature of product and services should be similar. Now these are very subjective lines. Some judgment will be required. So nature of product and services must be similar. Now one has to think, can I put cigarette and biscuit under one? Is the nature of product and service similar? Can you substitute biscuit for cigarette? No. Or suppose you are manufacturing steel and biscuit. Of course you can't put them into one segment. Then the nature of production process must be similar. So nature of production process must be similar. If not same, at least similar. Like for example, some activities are performed using assembly method of production. You buy different components, assemble them. Some are done manual, some are use of machines, computers. So one is to see the production process, then type or class of customer for their product and services. Whether the same product or whether this biscuit milk is consumed by same class of customer. So if your class of customer are also same or similar for those product, then you can aggregate them. Method used to distribute their product or provide their services. Distribution channel should be similar. What are the different distribution channel company use? One is their own branches, then wholesaler, then through retailers, through online. Okay. So these are the different distribution channel. So it should be similar. And if applicable, the nature of regulatory environment should be similar. Now, for example, in many countries, the regulation for banking and insurance are different. Can you put banking and insurance as one segment? No, because the nature of regulatory environment is very different. Risk and returns are also very different. Public utilities means power companies, water companies. So here the regulatory environment is different. So they are not usually aggregated into one segment. Of course, one has to apply materiality also. Okay. So now we will take a break.